Yes, you're
Hello,
good.
everybody. Hi, Sean Casten here. Thank you all for joining in. Really appreciate the sacrifice and the struggle that everybody's going through as we try to get through this pandemic and deal with a public health crisis and an economic crisis that are inseparable from one another. So, just want to start by saying how much I appreciate everything that everyone is doing in this moment. The sacrifice is not lost on any of us. Want to give a little bit of an overview of what we're doing legislatively, and then turn it over to Bo Steiner. Those of you who have been on these calls that we've done before know that he is an encyclopedia of knowledge. Bo and his partner, Jessica Maley, have been extremely gracious with their expertise, the SBA programs, and we'll turn it over to them to do the formal presentation. Want to just give a little bit of overview first, though, of what we have done legislatively, what we expect to do going forward, and how that factors into the programs that are out there right now. We have passed 3 COVID bills. The first bill was a $8.3 billion bill that also included $7 billion of expanded loan authority to the SBA. That created the EIDL, EIDL, Economic Injury Disaster Loan Program, and that created the first tranche, which was set up and was the subject of the first 2 of these webinars that we did with Bo and his team. That program is out, implemented. Took, I want to say, about a week and a half, 2 weeks between the time when we passed that legislation and it was then implemented by the relative executive branch agencies. That's pretty typical. We legislature passes the laws, the executive branch implements the laws. That was the first bill. The second bill we did, and that first bill, by the way, in addition to the SBA loans, had things like increasing money for public health agencies, more money to NIH for vaccine research and treatment research. So it was a very medically focused with a little bit of small business in it. The second bill we passed was called the Families First Act. That was primarily focused on dealing with the economic impacts specifically affecting individuals who are affected by COVID. Not exclusively, but that bill had within it expansions of Medicaid funding to the states, expansions in food assistance, reimbursements for companies, so that if you have an employee who needs to self-quarantine and take 2 weeks off work and that wasn't in your paid leave plan, there's reimbursements for that. Extended reimbursements for people who go on short-term disability should they come down with the infection. So that was all in that second bill. The third bill, which was the really big one, which was the CARES Act, CARES, that was the $2.2 trillion bill that was really much more broadly focused on the entirety of the economy that was affected by this. Huge chunks of things in there. The specific piece we're talking about today is the $349 billion of additional SBA lending that was out there. In that larger bill, we had counsel. It's unfortunate, but in some ways fortunate, that we have a lot of people who are currently in Washington or are available to those of us who are in Washington who were intimately involved in the 2008 bailout, and were able to provide us with some counsel for this disaster relief package. I emphasize disaster relief because it's not really designed to be a bailout. It's designed to be a disaster relief, which is a little bit of a different thing. But there was a recognition among those who were involved in the 2008 that there were some things government did well, there were some things that in hindsight government didn't do well, and to try to correct that. One of the things that that I think there was a general consensus from, people I've spoken with, like Ben Bernanke, Christina Romer, the people who were the architects of the 2008 package, was that there is a tension in these sorts of programs between getting money to where it needs to go and getting money out the door quickly. And the more we try to target where it wants to go, the harder it is to get it out the door quickly. And of course, the more we try to get the money out the door quickly, the harder it is to target it. And the general feedback we got from everyone in 2008 is that when you feel that tension, push for speed over efficiency, because you just don't have a lot of time to overanalyze the problems in these kind of dynamic moments. And so that's what we did, and we continue to push that way. Most of what you're hearing right now in the media about possible expansions, new packages that might come through the Senate, CARES 2, all of that is really around more precisely targeting where the gaps are. But so that lesson we took. The other lesson from 2008 that we've tried to factor in is that there was a significant concern, as I think many of you on this phone call know, that 2008 really prioritized the interests of business owners, didn't always prioritize the interests of employees and people who were affected. And of course, politically, we all know how that sort of manifests through the Tea Party wave. But we wanted to try to set this program up to make sure that the money really gets to the folks who really need it. And so a lot of these programs and the expansions of the SBA program were set up to make sure that it specifically targets what the needs are of the economy is, which is making sure that all of you businesses stay afloat, make sure that you can continue to make payroll so that once we get through the public health crisis, we can come back up. So the reason why this $349 billion program is called the Paycheck Protection Program is because it's very heavily tailored, not to your credit risk, not to your ability to repay, but to your payroll. And so it has funding that the amount of loan you can get is a function of the size of your payroll, plus some other details that Bo can walk through. And in certain circumstances, these loans can be forgiven with no continuing liability, but the portion that can be forgiven is that portion which you spent on payroll, mortgage, rent, what have you. So it's to make sure that we continue to have businesses viable and continue to have people employed, but doesn't really provide a vehicle to take money, shut down your business, lay off all your employees, and then all of a sudden be wealthier as an owner. So there's some constraints there that aren't in the 2008 program. The last sort of general observation. The other thing, by the way, that we did to expand in the second program was a recognition that for a lot of the tools that the SBA traditionally has available don't work very well for nonprofits, but a lot of the businesses that we need to make sure they still stay open and keep running are in fact nonprofits. And so some of the rules were modified a bit to make sure that this can also flow to nonprofits. That was the subject of a call we did yesterday. I assume probably doesn't apply to folks on this call, but I mentioned that because we're now sort of grappling with this advice that we got from Mr. Bernanke and others, Dr. Bernanke, that in the effort to be more targeted, it slows us down a little bit. So there's been some hiccups in the system. I think we passed the CARES Act a little over a week and a half ago. Secretary Mnuchin told me yesterday that they stood up all the program to start distributing money into the PPP 5 days ago. And as that's been rolled out, as you might imagine, for a program of this size, there's just been some glitches. We are well aware that there's been some conflicts in the paperwork that banks have received, where if they sign one form in the way that's required, it seems to conflict with another form. There's some challenges they've had with just general representations that the banks have to make. The banks are aware of that. The Congress is aware of that. The Treasury Department is aware of that. They just issued a rather significant chunk of guidance yesterday to essentially clarify how a number of those things are going to be interpreted. I think in general, it's pretty positive. I'm sure Bo will have more direct experience, but the result is that I know for a lot of folks who went to get these, your bank may have said we can't process the paperwork yet. Banks may have been prioritizing existing customers because they had more of the information for those. We are hopefully worked through that right now, but we are still moving very dynamically. So this is as much to let you know what we've done as it is to get your feedback, because we will then feed this back directly as we think about how to tweak the other pieces. Last thing before turning over to Bo, there will be more legislation. We are far from done. The mechanics of exactly how and when are a little bit tricky by virtue of the fact that, as you can tell, I'm working from my guest bedroom right now. We're not in Congress. We're doing as much as we can through unanimous consent. But you saw some of the things in the news today about how are we going to get through this added package. We'll work through that, but it only takes one person to block unanimous consent, and we're sorting through those issues. There also, I expect, will be a fairly sizable additional package, which we've been sort of euphemistically referring to as CARES 2. I expect that will have a healthy infrastructure component. I expect it will include a number of sort of patches to the things that are here right now. I don't want anybody to bank on that, because the timing and the details of that are very much in negotiation. but none of us are of the belief that what we've done so far is sufficient. It's the beginning, but we're going to keep working through. So with that as a hopefully useful legislative background, let me turn it over to Bo Steiner, who will walk through programmatically what's happening to implement these programs, and then we'll be open to your questions. If you do have questions, you should have a little box somewhere on your screen. Type your question in there. Staff will be reading it, and then once Bo gets through his presentation, we'll try to answer questions as we can. Thank you, and the floor is yours, Bo.
Great. Thank you, Congressman. I appreciate the opportunity to be here and support this conversation, get the word out to our many small business owners here in Illinois. So thank you for that. Can we bring up the slides, please? Nice.
Hey, Bo, this is Jessica. Do you need me to screen share or are you sharing?
Sorry. If you could share, that would be great. Thank you.
Okay. Yeah.
So the programs I'm going to talk about today are primarily focused on the Paycheck Protection Program, which is, as the Congressman mentioned, a $349 billion program to help small businesses and their employees by offsetting payroll pretty much for a period of 8 weeks, given the constraints that everybody's working under. I'll talk a little bit more about that. I'm going to talk about the SBA loan subsidy program that was part of the CARES Act as well. And finally, I'm going to talk about some existing SBA programs, specifically the SBA pilot bridge loan program, which may be another tool in your toolkit as you look to navigate your working capital and other needs for your small business. So if you go to the next slide, Jessica.
Oh, and I'm sorry, Bo, I interrupted you this time, and I should have said this before. We will make this presentation, these slides, available on our website. So if you're looking at this, if you miss a slide, they'll be up on casten.house.gov. Momentarily, you'll also find the presentations that we've done in prior presentations already up there. So you don't need to scribble down everything that you see here. Go ahead.
Great, thank you. Next slide, Jessica. All right, so Paycheck Protection Program is funded at $349 billion nationally. It is a up to 100% forgivable loan of up to $10 million determined by your average monthly prior year payroll. Now, this loan you apply through banks and other lenders to put your application in. It is a loan. 2-year terms, the terms are 2 years, 1% interest. And as I mentioned, up to 100% forgivable if at least 75% of the proceeds are used for payroll and payroll expense. We'll talk a little bit more about what that means, but suffice to say that payroll, cash compensation plus other non-cash benefits that perhaps you offer, including healthcare contributions, retirement contributions, paid sick leave, those sorts of things are included in your calculations around payroll expense. It also looks at your full-time equivalent headcount. So you're going to want to look at your full-time equivalent headcount through your average through the year, and then that forgiveness as well. We'll talk a little bit more about that, although some of the guidance around the forgiveness calculations are still forthcoming. So more to come on that later. Next slide. So who's eligible? Any small business with fewer than 500 employees. And importantly, this includes sole proprietors, independent contractors, self-employed, as well as private nonprofits, 501c3s, and 501c19 veterans organizations. Note that there are certain industries where the size standard that is applicable is more than 500 employees. So in those instances, the applicable SBA size standard applies. So that could be 1,000 employees in that particular instance. Small businesses in the hospitality and food industry with more than one location could also be eligible at the store and location level if the store employs less than 500 employees. So what we're talking about there is that those sorts of businesses that have multiple locations may in aggregate add up to more than 500 employees. Based on this relaxation of affiliation rules, That means that those types of businesses that have multiple locations, each one has fewer than 500 workers, but aggregate maybe more, would still be eligible, understanding that there is still that $10 million overall cap. Next slide, please. As I mentioned, you can apply through any existing SBA 7A lender, through any federally insured depository institution, federally insured credit union, and farm credit system institution that is participating. There are instances where maybe your bank isn't participating. That's okay. We continue to add new lenders. So I would say, you know, if your lender's not participating, go to SBA's website. We have a lender finder, PPP lender finder on our website, which will help you find other lenders who are participating in the program where you could apply. We're expanding the network of lenders. We've got a streamlined application process for new lenders to participate, both depository and non-depository lenders. So that could be banks and non-bank type of lenders. So we are rapidly expanding the network of lenders that are available. The program kicked off last Monday, April 3rd, and tomorrow, April 10th, it's open for self-employed and independent contractors. So key point there. Period of application ends as of June 30th of 2020. So we encourage people, if the need is there now, apply now. But at the end of the day, the way the statute or the interim final rule reads is the last day for application is June 30th or when funds are depleted. So mention, how do you apply? You go to your lender, maybe it's the bank that you currently bank with or some other lender that's participating. First thing I would say is call them, understand what their application process looks like. Some lenders have set up online portals so you can submit your information online. Others will work with the paper application. Also ask them what payroll records they're looking for. Everybody's got a different situation. You could use perhaps your W-2s that you filed on behalf of your employees. You could use your financial records. If you use some kind of accounting system that will give you that information. But again, work with your bank to make sure that you have the best set of information that supports your monthly average payroll calculation. Again, what you're going to do to figure out what that average monthly payroll calculation is you're going to take that 12-month period. It could be a 12-month look back. So from today, going back 12 months, or you could look at 2019. There are additional ways that you can calculate average monthly payroll, say if you're a seasonal employer or some other characteristics that this 12-month look back may not be applicable. So we do have a FAQ that came out from the Treasury that clarifies what those are. So you want to look at that as well if you don't think that the 12-month look back is the right fit for you, because there may be other options. When you think about payroll and payroll expenses, it doesn't just include your cash compensation. It also includes maybe other benefits that you pay for as the business owner, but are provided for your employees. So as an example, maybe healthcare contributions, retirement contributions, paid sick leave, other expenses that you incur as a result of basically having employees on staff. So you're going to aggregate that, divide by 12, and then a 2.5 multiplier on that average monthly payroll gets you to the max loan amount that is allowable under the program. You're going to fill out the application, whether it's through this lender portal or through the paper documentation. Highly recommend you just download the application anyway, just to see what's in there. You'll put in your business information, your personal information, your average monthly payroll, the number of full-time equivalents, and then the rest of the application really revolves around you attesting to certain things that either, that ensure that you are eligible for the program. These are things like, yes, my business has been adversely impacted by the COVID-19 coronavirus, or, yes, I will abide by the rules that say that I need to use that there are certain uses of proceeds for this loan, including payroll, utilities, rent, mortgage interest expenses, so things like that. Also that you aren't delinquent on a SBA or other federal debt that may disqualify you. So just going through the whole application, making sure you fill it out completely, that you've answered all the questions truthfully, and then you sign off on that. That is your application, along with the payroll records that will support that application. The way the process works, you apply to the bank or other lender. They have some documentation that they pull together on their end, gets submitted to SBA. Once SBA reviews and approves it, then they send an authorization to the bank to go ahead and complete the loan. You'll work with the bank with the closing documents and everything else to close the loan. And then you'll see either a full disbursement or initial disbursement with ongoing disbursements, depending upon your agreement with the bank. From that point, the earliest that the bank can request the forgiveness is 7 weeks. They're going to look to you as the business owner for payroll documentation that demonstrates what you've paid for payroll and payroll expense, and what your headcount levels are from a full-time equivalent standpoint. The calculations regarding forgiveness, we're still waiting for those to come from our headquarters, so stand by for more guidance on that front. But generally speaking, that's the kind of information they're going to look for. Again, when you're closing the loan, my recommendation would be to talk to your lender and make sure you know exactly what documentation they're going to want to see as you go through the forgiveness process. Once you hit that point and you've provided the documentation for forgiveness to the lender, they pull together their application to SBA for forgiveness. It goes, if approved, it goes to the Treasury to pay off that loan on your behalf. Assuming 100% forgiveness, that loan is cleaned off your record, so to speak. That's probably not the right term. I'm not a lender, but basically it's paid off. If 100% of the loan is not forgiven, or you didn't use all the proceeds, something like that, then that loan will continue per those 2 years, 1% interest rate terms. Again, proceeds of the loan can be used for payroll costs, payroll expenses, including, related to continuation of group healthcare benefits, paid sick, medical, family leave, insurance premiums, those sorts of things. The loan can also be used for mortgage interest payments, rent payments, utility payments, interest payments on any other debt obligations that were incurred before February 15th, and refinancing an SBA EIDL loan made between January 21st and April 3rd. I highlight on the last screen the payroll costs and additional payroll expenses, because those are the things that will be taken into consideration for that 75% amount of the disbursement that needs to be spent on those areas in order to receive forgiveness. Let's see. One other question I just want to address right now is just people ask, hey, can I get both the Paycheck Protection Program, can I participate in that, and participate in the Economic Injury Disaster Loan Program? The answer is yes. The key component that you need to make sure that you keep an eye on is that you're using them for different uses, right? So if you use Paycheck Protection Program and you're using it for payroll, and you have an economic injury disaster loan that you're using for other working capital needs, that's totally an appropriate use where you could access both of those programs. If you were using the economic injury disaster loan for payroll and you intended to use it for the same use that you're using the PPP for, then the expectation would be that you would roll that economic injury disaster loan program or loan into the PPP, which would basically just refinance that EIDL loan, and you would no longer have the economic injury disaster loan. All those funds would be in the PPP loan. Next slide. So that's PPP. The next program is the SBA Debt Relief Program. This is focused more on those businesses that have 7A loans which are guaranteed by the SBA. Purpose of this loan is, or this program is a subsidy program. So what we're doing is the SBA, using funds from the Treasury, is paying the principal and interest payments for SBA 7A loans for a period of 6 months. So that's existing SBA 7A loans. They will also pay the principal and interest of new SBA 7A loans issued prior to September 27th, 2020. So effectively, it should be transparent to you if you have a 7A loan that your bank will provides information to SBA on what the payments are, and then SBA will automatically start paying it for you. If the bank receives payment on one of these loans after March 27th, which was a couple weeks ago, you should have gotten notification from your bank asking whether you wanted them to return the payment to you or apply it to the principal. So it should be transparent. You should start seeing the payments come in to your loan account to pay for the principal and interest for your loans for a period of 6 months. Next slide. Okay, the last program I wanted to touch on from the standpoint of more the disaster component is the Express Bridge Loan Program. This is a program where you can work with your lender if they are an existing 7A lender, or I'm sorry, your banker. If they're an existing 7A lender and you already have a relationship, you can go through a streamlined process to access an up to $25,000 working capital line with less paperwork. Basically intended to help you bridge the gap as you're going through, as you're impacted by the coronavirus and the adverse impact it's having on your revenue. Next slide. Kind of high level, it's up to 25,000, fast turnaround. It can be repaid in full or in part by proceeds from the Economic Injury Disaster Loan Program. This is one of the exceptions where you can use the EIDL to refinance something. Maturity is up to 7 years. SBA provides a 50% guarantee to the bank. And again, you make application through a bank, and there's no collateral required on this loan. So it's another tool that's in your toolbox in the event that, let's say that you did not apply for the Economic Injury Disaster Loan, but you still need a little bit of working capital needs. You work with a bank that is a 7A lender, you may be able to access this as a program for you. Next slide. SBA partners. So we work with a network of partners that we fund who provide one-on-one business counseling and advising to help small businesses and entrepreneurs. So generally speaking, when we're not in a disaster situation, they help startups figure out their business plan. They help existing businesses work on operations. Right now, the Small Business Development Centers, SCORE, Women's Business Development Center, Veteran Business Outreach Centers are wholly focused on helping businesses navigate the challenges that the coronavirus presents, to include application to the PPP. We recently trained the Small Business Development Centers up on these programs, so they are very familiar. And as you look at your strategies to get through the next 2 weeks, the next 2 months, and beyond, they can be your partner and your advisor as you think through those challenges that you face and help you navigate the things that are going to be in your best interest and hopefully help you weather the challenges that the current situation represents. Next slide. Okay, last slide. We'll get to questions. If you have more information, or if you want more information concerning SBA, latest and greatest, you can find it at sba.gov/coronavirus. If you have questions about our disaster programs, you can go to sba.gov/disaster. If you do have questions that you can't answer or you don't know where to go, please email us at the Illinois District Office at illinois.do@sba.gov, or look for us at sba.gov/il. If you are if you did apply for the economic injury disaster loan or the economic injury disaster loan advance, and you want to get a status update, please reach out to our customer service center at 800-659-2955. And with that, I'll hand it back to you, Congressman.
Thank you so much, Bo. I'm always impressed by how much you know about these programs. It's much appreciated. We're fortunate to have you. So the floor is now open for questions. Again, if you have questions, type them in the box. Our staff will run through, try to make sure that we get through as many of these as we can, combine a couple if we've got duplicates. And I think we've got about a half an hour, so we'll try to get through as many as we can. Questions about the program, about implementation, questions about legislation, future things, anything's open, but with a hopefully focus on the small business end of what's going on right now. So whoever is managing the questions, the floor is yours as moderator.
Okay, well, Dan's company applied for an SBA loan on March 23rd for the SBA advance a week later, and then most recently for the PPP, but they have heard nothing. Kim and Frank have also completed their applications, and we're wondering when they would be acknowledged, processed, and paid. What guidance can you give to Jan, Frank, Kim, and others who are asking about timing? They are frustrated, and they want to know if there's anything more they should be doing.
Sure. So from the standpoint of the economic injury disaster loan and economic injury disaster loan advance, SBA is working very hard to get those funds out. We know that time is of the essence when it relates to the cash flow for small business owners, and taking care of your obligations, including your employees and all the things that you need to do. My understanding right now is that the processing of those applications is ongoing, but that disbursements should start happening and decisions should start being released very shortly, within a matter of days. If you do have questions about the status of your application for the economic injury disaster loan or advance, again, that will be better. We don't have access to those records, the systems that they use in the district office. So that's why we point people to the 800 number at 800-659-2955. As far as the Paycheck Protection Program, since that loan is processed through a lender and not through the SBA, what I would recommend for those business owners is to get with that lender that they applied to and make sure they stay in touch with them as to the status of their loan application and any information, or you need any additional information, just stay on top of your lender that you're working with.
And I would also say, feel free to reach out to our office if there's specific things we can help. Do be aware, as I'd mentioned at the start, that the PPP program, while we passed the legislation a week and a half ago, has only been actually implemented for 5 days. And 2 days ago, I was being told informally by some of the banks who are administering these that some inconsistencies in the documentation they were putting them in a position where they either had to take risks they were uncomfortable with taking, or else prioritize existing customers over new customers, where they sort of had enough internal knowledge and history, which was not their intent, but was where it was. The guidance, Treasury is aware of that. Treasury released guidance that should have cured that yesterday, but this is very dynamic in real time. So as Bo said, stay in touch with your bank. And keep in mind that everybody in this period, nobody wants to overpromise, but I think everybody's got a vested interest in maximum transparency. And if we can help do some of that transparency, reach out to our office and we'll see what we can do.
Okay, Craig asks, regarding PPP, does this program cover sole owners of an LLC that does not have a payroll, but the owner earns an income through the business entity, shareholder draws, compensation, and profits? Vinod is asking if there's any help for single member LLCs who do not have payroll expenses, and Stacy would like to know whether a sole proprietorship with no employees who take no salary but does take distributions from profits can file for a loan. Can you provide some clarification on their eligibility in these situations?
So from the standpoint of distributions and draws, as far as the interim final rule does not call out specifically those forms of compensation. What I would recommend is, compiling all your records, because what the interim final rule does say is that the mechanisms to demonstrate compensation or payroll, if you will, for a business is the banks have fairly wide latitude to collect different types of documentation. So my recommendation would be to work with your lender to walk through the process, find out what documentation they need in your particular instance, and ultimately they make the eligibility determination upfront for the loans. That's part of what they're doing in the process. So while it doesn't call out draw specifically, I would ask them, hey, can this be considered my compensation for the purpose of calculating the payroll?
Okay. Michelle would like to know if it's okay to apply for the PPP through multiple banks. She has applied through her bank, Chase, but has not heard back from them and can't get in touch with anyone to find out if her application is under review. Dan has a similar question. He applied for PPP on April 4th and has not heard back from them and wonders if he should apply through another lender to get a faster reply.
Sure. So that's going to be your own decision that it's going to be up to you to make. The only thing that I can say in this matter is really you can only receive one PPP loan. So with that in mind, as you're putting application in, that's the primary consideration from our standpoint. I can't tell you not to make multiple applications. It's really going to be up to you what you do.
Okay. Anthony asks, in my specific situation as a business with a large warehouse, and with large rent plus utilities and only one employee, does PPP make sense for him because PPP requires 75% of the money that he receives goes to payroll? Can he claim his 1099 contractors as part of payroll when applying for PPP?
Sure. So 1099 contractors do not count as payroll for the purposes of the PPP. And the reason for that is that contractors or independent contractors can apply on their own. So the only payroll that counts towards the payroll expense are those formal employees of the business.
We should just clarify though that this is at the entity level. So your business is an entity that employs W-2 employees, can get an amount equal to those W-2 employees. Individual contractors as individual entities are separately entitled to draw on this. It's a bit more paperwork, but it's not that they aren't entitled. It's just that they have to go through parallel processes.
Right.
Okay. Justin's business opened in November 2019, but he hasn't paid himself yet and was hiring his team. He planned on paying himself quarterly. He's getting conflicting answers on if he qualifies for PPP. The owner is full-time and the employees are part-time. Who qualifies?
Sure. So again, I think you said that the business has been in business about 6 months now, if I heard that right?
Yes.
Right. So what I would reference would be the FAQ that was provided through the Treasury, and we can provide that to the Congressman's office that discusses how businesses that have been in business less than 12 months can basically develop their average monthly salary. But that's about the best I can do from the standpoint of advising on how to handle that.
Okay, Paul was told by his bank that the SBA Form 2483 was changed last Friday. Was that form indeed changed, and where can he find the correct form?
Sure. The most recent form is going to be on SBA's website at sba.gov/coronavirus.
Okay. Kim has a question about the FMLA leave and asks, in what time increments can employees take time and what documentation is required from those employees? I believe this is more in reference to the tax credit.
Yeah, so I can tell you legislatively, and our staff can help you with the details offline, but the way that FMLA leave was set up legislatively is that if you If you are a business, if you're a large business, you provide an extra 2 weeks of paid sick leave, and then potentially an additional 2 weeks of short-term disability. And the first block is reimbursable off your tax. You get a tax credit back at 100% dollar for dollar. The second chunk for extended sick leave beyond your normal policy is a 2/3 credit, again reimbursed through your tax returns. If you have fewer than 500 employees, since you may not have the liquidity to ride through or wait for tax season, that can be recovered via a direct cash payment. There is a time lag on that. I believe that it's either through Department of Labor or Treasury. Our staff can get you the exact forms of where that's done. But that was added, again, one of these things to sort of fix some of the things that were done in 2008, because that idea of reimbursement wasn't there before. It also means that programmatically that had to be set up. So I don't recall off the top of my head, but if you're under 500 employees, follow up with our office and we'll get you the specific forms.
Okay, Ricky says that her bank sent the SBA PPP form and she's awaiting approval. She is concerned that the form only asked about the current number of employees to the S Corp she has, but did not ask about new employees she may want to hire. The amount she entered on the form didn't cover that. Was she supposed to add payroll for new employees, or is it too late?
Sure. So the way the program's set up, it's based on historical payroll. It doesn't specifically, at least the interim final rule doesn't specifically address increases in accounting for increasing headcount over time that I've read so far. So basically, that's how it was set up. So I don't think I answered both questions. I think there was 2 questions to that. Can you ask me the second part? I'm sorry.
Sure, no problem. So the amount she entered on the form was based on her historical payroll, but she would like to add new employees. Could she reapply or add additional employees in another application to another bank?
So you're only eligible to apply for and receive 1 PPP loan per applicant. So, if you've applied to one bank for a certain amount, you can't go to another bank and apply for another amount. The system will flag you and won't allow you to receive 2. You also have to attest that you aren't receiving multiple PPP loans in the application. But the way the program's working right now is that it's more of a employment retention kind of program as opposed to increasing employment, at least the way that it's structured and how you calculate the average monthly payroll and payroll expense.
I think Bo's got that exactly right. We're trying to protect here against, those 17 million job losses. If your business is growing, that's terrific. Delighted to hear it. But what you're covered for is holding that head count there. Now, I would say, to the extent your business does grow, and then you have a hiccup in the future, to the extent that your head count is higher than it was before, it's going to make it a little bit easier for you to cover that that forgivability quotient should you need to draw on that. But it sounds like you may be in a position where you fortunately wouldn't have to worry about that, which is great.
Jill states that her business bank hasn't opened their PPP portal to accept applications. Will the money run out? Should she go somewhere else to apply?
So from my perspective, I don't know exactly how long the funds are going to last. It's not a unlimited pot of money right now. I think the congressman addressed what the interest of Congress is in increasing that amount. So, I think that's going to be a personal decision that you're going to have to make as a business owner is, do I feel like I can't wait on my bank anymore and I need to go to another bank?
I would encourage you, if people aren't moving, to find people that are moved. Secretary Mnuchin told us about 24 hours ago that of the $349 billion that we'd authorized, that 98 billion had been at least earmarked as of 24 hours ago. So it is moving pretty quick. That's why there's this discussion right now between the House and the Senate of adding another $250 billion I'm not going to predict timing or anything on that, but I would say if, there are banks that are set up and are running these programs that have historically run them. There's banks that are new to this field that are getting into them that are now running them. There's banks that are new that haven't quite figured out how to manage the paperwork yet, and there's banks that are not in the program. Because there are channels that are moving, I would say if you're in a different channel, I would advise you to find a bank that's comfortable to move on this.
This is somewhat related. Judith is asking about a situation in which she was turned down by her first lender, and can she apply to a second lender?
As far as I know, there's no restriction on making a second application for the program, not knowing what the reason was why she was turned down initially.
Okay, thank you. Kishore would like to talk about the EIDL and emergency advances. When would they be being distributed to businesses? How much can businesses expect? And Peter is asking the same question. When will the SBA start making the initial EIDL payments? And have they begun processing those requests?
So I know they are processing the requests. When that money will hit people's bank account, I have not been informed of that at this point in time, or what the average disbursement will be. So we're still waiting on that information from our Office of Disaster Assistance to get us info that we can share with our community.
Okay, is there a credit check required to receive the PPP loan?
So the PPP is not a credit decision. So it's solely based on payroll history. So no, it's not a credit decision. And I wouldn't expect that the lender would necessarily even need to pull your credit. I can't say what their internal processes are, but it's the only thing that the program asks to look at is the payroll history.
Okay, Christian wants to know if the EIDL and or the PPP loans will be considered income in 2020, and will they be taxed?
No.
Right. So the economic injury disaster loan is a loan, so it's definitely not taxed. The advance, I think Congress has made special part of the legislation was that both for the EIDL, that the advance that's forgiven or basically a grant is not taxed. And then on the PPP, say you get a loan through the PPP and it's 100% forgiven, that is also not considered taxable income.
Okay. Greg applied for the PPP loan. His bank did not allow him to include health insurance costs for his employees. Should they have?
I typically will defer to the lender and what their processing is, but according to, you can look in the interim final rule and you can see all of the allowable expenses to be considered for the PPP, and I'm happy to carve out that the list of eligible expenses to be considered, and we'll definitely share that with the Congressman's office and all and subsequently be shared with you.
Yeah, certainly the intent is that this is supposed to be the fully loaded cost of employees, because it doesn't. What we're trying to do legislatively is to make sure that that everybody is sort of made whole during this period as much as they can be. And if we were taking away their health insurance, that'd be bad for a whole lot of reasons. What I don't know, Greg, is if there's something sort of unusual about the way that you're providing people's health insurance, maybe that would apply. That's I don't want to speculate on your specifics, but in general, this is your health insurance, your short-term disability, whatever your whole benefits package is, your retirement contributions, all of that is supposed to be a part of what goes into setting the baseline for that 2.5x loan size.
So Patricia is a single business owner, a consultant, and she has an S Corp status. She's asking whether she may apply for both PPP and for state unemployment through the IDES.
Well, she definitely can apply for the PPP. As far as how the interaction between the unemployment and if, assuming she's approved for the PPP, how that interacts with unemployment would be more of a question that I would defer to the folks that work with unemployment, because I don't know how that interaction happens.
I would be a little bit surprised. I mean, I'd call the state unemployment office, but I'd be a little bit surprised if you can qualify in one count as being a paid employee of a company, and on the other count as being unemployed by that same company. If that's possible, we made a mistake in the drafting of the rules. So I don't think that's possible. Now, having said that, if this may tie back to some of the prior questions about if you have an LLC and you're not getting payroll, but you're taking distributions. And it goes to the heart of why that question is difficult. Because if you're taking distributions and look, I get it, I used to run LLCs. Sometimes when you're the owner of a small company, a distribution and salary are a little bit fungible, but you can also imagine how that would be gained. So maybe there's some circumstances in between that are a little bit half pregnant, but I would be surprised if you'd be able to qualify for both.
Okay, Dan's company has hourly employees that have been off work for almost 3 weeks now. They've continued to pay them at 60% of their 40-hour week. Do they have to pay them at 75% to receive full reimbursement through PPP? Dan doesn't want to lay people off, but they cannot keep paying them that much longer.
So I'm not entirely sure I understand the question completely, but in order to receive forgiveness for the PPP, then at least 75% of that loan needs to be used for payroll and payroll expenses. I don't know how that reflects back on the current period right now prior to receiving the PPP, and I think that's maybe where I don't understand the question necessarily.
I think there's two separate questions, and I'm going to guess here, and Bo, correct me if you think I've got this wrong. The first question is, what is the size of the loan you are eligible for, which is 2.5 times the payroll expense you've had during the prior 12 months or the 12 months of 2019, however you decide to sort of put your case together. The 75% test is then a separate question that says, if circumstances evolve such that you will be seeking to not repay that loan, but to have it forgiven, your business is going into liquidation, so, something else like that. In order for that to be forgiven, that portion of the loan which is forgivable is only that portion which is constrained under the 75% test. So to some degree, I think you're going to have one question of what is the 12-month look back, and that's a conversation you're going to have as far as your employees' expectations and how long they can continue to be paid at the 60%. And you can work with your bank and your employees. I'm not going to advise you on that. Once you set that number, that sets the number of which, if you're then spending, let's say 50% of that number on payroll, then you're not going to be able to recover as much through the forgiveness program. But I think they're separable questions. You agree with that, Bo?
Yeah, that makes sense. Yep.
Brian would like to know, for an EIDL loan, how does the SBA determine the amount of the initial grant?
So the specifics on how it's if you're referring to the grant, then that's the EIDL advance component. The specifics of how that's calculated are, I don't have the exact calculation, but it's payroll related generally, is my understanding. And that's up to $10,000. So my understanding is it can be anywhere from $1,000 to $10,000 if you're approved for the advance, depending on your payroll.
Okay, Kim is asking about the 500 employee limit. She's heard that the PPP is available for stores with less than 500 employees who have multiple stores. Does that mean that our local small businesses are going to be competing against larger companies?
So the 500 is a it's not a physical location, but a legal entity test, I believe. So if you have if you have the company I used to run, we had an operation in New York, we had an operation in Illinois. those were all separate legal entities. And so we could have, if we were in this situation, we could have conceivably taken a loan from our New York entity that didn't commingle with our Illinois operations, but would have been limited to those expenses within that entity. If you are Target, as an example, you have way more than 500 employees, but you don't have more than 500 employees at any given store. But those stores are not individual legal entities. Those stores are not going to be eligible to take a loan because those stores don't have any, legal corpus that could be the payee on that loan. The payee would presumably be Target corporate in that example. So I don't think that's going to be an issue. But Bo, is there any nuance I'm missing there?
So I think there was some intent based on the way that they wrote the rule, which is that businesses in the hospitality and food industry, those are the ones where the affiliation rules have been relaxed to some extent, where there may be businesses that overall, like a restaurant group, for example, might have more than 500 employees, typically would not, under normal rules, would not be eligible because of the circumstances or because of how the CARES Act was written. Those industries in particular have some, have the relaxed standard, and I don't like to guess, but I can only guess it's because we know that those industries are particularly adversely impacted due to shelter in place and things like that.
Okay, thank you both for answering so many questions. I did want to give you time for your final remarks.
Go ahead, Bo.
All right. Well, again, I want to thank you, Congressman Casten, for having me on. I really appreciate it. Appreciate everybody's questions. I know everything, it seems really complicated, and I know that everybody's really challenged right now. I appreciate your patience with us as we really work hard to help support your needs. Know that the SBA team, we're working hard to support you. Know that the lenders too are trying to marshal the resources to process the PPP loans and do everything they can to serve the business community as well. So just appreciate the opportunity to answer your questions, and we're here to help you and to continue to get you the information that's going to help you navigate this stuff. So thanks again.
Thank you, as always, Bo. Thanks you, Jessica. As I said at the start, if you didn't get questions asked, shoot them through to us. We'll get them afterwards. If you missed anything in this presentation, fear not. It will be posted casten.house.gov, including all the links, and can follow up. And keep us posted, not just with your questions, but if you do find programmatically that there's just a gap, there's some confusion. I think most of what all of us members of Congress have been doing over the last couple of weeks is identifying gaps that we can fix legislatively in the next package, or sometimes just fix administratively. This FAQ that the Treasury Department released yesterday in dealing with some of the bank hiccups was a direct response to the fact that we had, those of us as members have constituents who are voices on the ground that can say this is a gap, and then they were able to fix that administratively. So please do reach out to us. Let us know if we can do that. And as I said at the start, thank you all for all of your collective sacrifice. This is a collective public health crisis. It is a collective economic crisis, and we are going to get through it collectively. I think we all appreciate how many shoulders we're all leaning on right now. So thanks for being a shoulder. Thanks for needing a shoulder, and stay safe, stay strong.